Warren Buffett just invested $1 billion into the housing market, and we are going to discuss what that means for housing.
Right. So a lot of you probably know Berkshire Hathaway, and if you don't, you should. You should study what Buffett has done. I'm actually going to his annual event next May. He does a shareholder event in Omaha, and he's one of those guys that you absolutely have to watch. I mean, if you just take a look at his track record of what he's bought and when, it's really, really something. There's books about him. I've read it. There's a great book called Snowball. But the point is this, when there's a lot of transactions happening right now, and when he makes a big investment like this, it's something that you guys should be watching. And we've been talking about why. So when the market's beat up, like when things aren't moving and when there's a huge shortage, this is when the big money moves in. And so this is a good indicator.
Yeah, so basically he invested $800 million into Lennar and almost $200 million into D.R. Horton. And a lot of people might wonder why, because right now we're talking about how bad home builders are doing. So if home builders are doing so bad, why would he invest $1 billion? And if the housing market is going to crash, as a lot of crash bros are saying on YouTube, then why would he invest $1 billion into housing?
This is exactly what I would do.
Exactly. So the way you have to look at it is Buffett doesn't bet on short term. He invests in long term, right? So he's not looking at what's happening in 2025 or 2026. He's looking at what's happening in 10, 15 years from now. So that's how you guys need to be looking at the market if you want to make money in housing and in real estate. So he understands that these are cyclical cycles.
Yeah.
We're just in a frozen market.
And I think what's important to look at is these are public companies. So you guys can go on and take a look at their filings and how they're doing. And they're not doing great. And we've been talking about Lennar, for example. And so how is it reflected? It's reflected in their share price. Okay. So when their share price is down for whatever reason, maybe it's lack of sales, maybe it's they're spending a lot of money on their marketing costs. We did a chart a little over a month ago, Jerry. I can't remember when exactly, but we'll find it during this live to show you how the net number for the Lennar home sales is down significantly. I think it was down like 37%, if I'm going off of memory. So when you guys should know this, that obviously, and a lot of you do this, but you want to buy when markets are down. You don't want to buy at the top, obviously. And so the question is, maybe it hasn't bottomed, who knows what, but this is one indicator. There's another one that Danille and I were talking about this morning, and that is the Apollo Group. So if you look at the Apollo Group and BlackRock, they made huge deals as well just in the last 30 days. One was Bridge Investment Group, which I know very well. They had, last I knew, they had 40,000 apartments, and they went public a few years back, and they did an all cash purchase of their stock, and they're valued at about $48 billion. So why would that happen? And then there was another group that BlackRock bought, which was a net lease company. Now I know these aren't single family, but when these big companies are actually making acquisitions, and they're making acquisitions because what? Interest rates are up, cap rates are up, values are down, and there's blood in the streets right now. And yes, it's early, and I've been talking about this. And so, as you know, you guys, we've had a very, very good year so far this year. We've had 7 transactions. We have another one closing on the 17th of September. And then, we have a couple more before the end of the year. Well, why would we be doing that? We're doing it for the exact same reasons. We don't have all the managed money like Apollo Group or BlackRock or even Berkshire Hathaway. But this is kind of the point.
Yeah, and you have to understand why the market is frozen. So the market is not frozen because there's not demand for houses. There's a lot of demand for houses. The market's frozen is because interest rates are high. So Buffett knows that once interest rates go down, it's going to pick up, it's going to pick up transactions, right? So he's trying to jump on that before that happens. And we talk about that a lot on this show. And you already are seeing it now. People are thinking that the Fed might even cut rates a 0.5 point in September. So it's a big deal. And you have to look at, these home builders right now, their sales are down, but they're still, up 20%, right? So even though they're not doing great right now, they're not doing bad. And they're able to artificially lower their own rates, which is pushing people into new builds right now. Like if you're going to buy right now, a new build is one of your better deals. But the problem is that they're artificially buying those rates down. So when rates actually do go down,
right,
home sales are going to go up.
That's probably worth mentioning. And so one of the things that Lennar started doing, like home builders have been doing, they're not unique by any stretch, is that when rates went up, to Danille's point, part of the closing process is buying down the rate for the buyer. And that what they did is they put that into their marketing costs. So the rate buy downs are part of their marketing costs. So their marketing costs are all the things that they would do to try to sell a home, and therefore it affected their net. And so that's what we reported, and we put that graph out a little while ago. So it doesn't surprise me at all that, Buffett saw this and he's like, okay, their margins are way down. And let's don't even talk yet about tariffs and all the other costs potentially that could happen as it's going to be related to the actual cost of building a home. So all those things. And so what is Buffett really banking on? He's banking on the fact that rates potentially could go down. And trust me, he is definitely an insider here. That's the first thing. He's also banking on the fact that that we're severely undersupplied. And you guys know this. Look at the National Home Builders, look at the National Apartment Association, look at the National Multi-Housing Corporation, look at anything, and even the realtors, Zillow. They all have these separate reports that we're millions and millions and millions of homes short as a result of basically the financial crisis from the last 20 years. And we're not going to unpack that today. But the point is that we never got caught up, and based on the growth of the population and based on the supply of housing. Now, a lot of you are going to point to little specific areas. Well, that's not what's going on in Miami, or that's what's not going on in Atlanta, or wherever you are. I'm sure you can make a case for your individual market being in trouble. I know a lot of those markets myself in the multifamily arena. I know specifically like downtown Phoenix is in horrible shape because there's a lot of new supply added down there, but just a few miles to the east, Tempe, there's no vacancies hardly at all. So a lot of these things are sub-market driven, but nobody can dispute the fact that a lot of these home builders have not been building because they can only build if somebody can afford to buy them. And because rates have been high, the mortgages have been high. So that's essentially where we are. So I think this is a brilliant move.
Well, and he's also waiting for the other, he's investing in these bigger companies because he knows that these builders are going to come out strong when the other companies fold. So these smaller home builders are going to fold because they can't do the rate buy downs and they can't offer the same incentives and they can't weather the market. And, UMC companies specifically saw this in 2011, and then now you're seeing it again now where people are starting to collapse because they don't have those bank relationships, and other companies will come out strong because people are still going to want new builds when the market picks back up, and there will not be that many home builders that aren't large home builders able to do it.
Right. So if you just look at the big picture, obviously Lennar, D.R. Horton, their sales are way down as a result of interest rates up, costs up, all the things that we already discussed. So your little local home builder, wherever it is, I've heard so many stories. We have a mastermind called The Collective, and we have people in there that are in this space. We have one one member that actually supplies windows to the home building industry. And he's like, we're dead in the water right now. In other words, he's not providing any windows because they're not selling and they're not building. And so everybody's throttled back. So of course, have the independents. We'll call those the people that build one house, or maybe they build 100. They would be called independents, even though 100 homes a year is a fairly significant company, but nothing like a D.R. Horton or a Lennar. So so this is all, as you guys, should not be new information to any of you. This has already been happening as a result of the higher interest rates. So, and then of course, on top of all that, I don't know if you guys saw this week, Trump, of course, floated a whole nother little curveball, talking about we have an affordability problem, right? And really, this is another angle for a case for lower interest rates. But he's basically saying the U.S. has an affordability problem, and I actually tend to agree with him, because what should happen, or what's supposed to happen, is my kids who are in their 20s are supposed to be able to get good credit renting an apartment, just like a lot of you guys have. And then they're supposed to be able to save enough money to be able to buy that starter home, which is supposed to be affordable. That is not the case, as we know right now. There's never been a gap like this since I've actually been in this business between rent and mortgage. It's thousands of dollars a month difference. And so that is actually the problem. The jump from a rental to a single family home has never been harder for the consumer. And we all know this. And so that's specifically why I'm buying a multifamily right now, because multifamily right now is going to be on fire here before we know it. I mean, that's why we're buying Rita Ranch. And, we're building a property called Rita Ranch right now in Tucson for some of the you guys that know that. And we've already broken ground on another one called Mason Ranch, a 312 unit. So, those are deals that we have going right now. Then they're going to open in 2027 specifically because of this issue. So you got to pay attention to these kinds of things when these big guys are buying up.
So a lot of people on YouTube are kind of mentioning that they think prices are too high for incomes. And I tend to agree right now with rates as high as they are, but you do have to understand that the Trump administration on both sides of the aisle, Democrats and Republicans, want to try to make it easier for people to buy homes. And we talked about last week, all the different things they're trying to do to make it easier. They're floating the 40-year mortgage. They're floating assistance with down payments. They're floating less than a 5% deposit on a home. So if rates go down, people solve to their monthly payment, but also the down payment is a big issue too. So if they lower the down payment and they lower the interest rates, that's going to do a lot to get these people in homes. And when you get more people in homes, prices do go up.
Yeah. Well, that's never going to change, guys. What you really need to be paying attention to is why are the big guys buying these companies, right? That's the bottom line. Why is this happening? Why is Buffett taking a big stake in Lennar? Why is he taking a big stake in D.R. Horton? Why is the Apollo Group buying Bridge Investment Group? Why is Blackstone? Blackstone's been in the game already, right? But now they just bought a huge net lease company. Why is that? It's because there's blood in the streets in the world that I'm in, right? I can't even tell you. Yesterday, we had a huge meeting of the investment committee in my company, and there's all kinds of people that are underwater right now. In other words, the loans are more than the value of the property itself, all over the place. And home builders make money when they sell homes, and that's way down. So when you start to see these kinds of things, values are down. When values are down, then that's the time where these big guys come in and they do these, they come in and make these huge investments. The last thing, what's not prudent is buying these assets at the top of the market, which is exactly what a lot of people think you're supposed to do, but you're actually supposed to buy them and then just wait for the market to correct, which is absolutely positively going to happen. What goes up must come down. It's already come down, and now it's, in my opinion, it's going to go back up again. Now, how long? Who knows? But again, if you're in it for the long haul, which is what Danille talked about earlier, Buffett's in it for the long haul. This isn't a short-term play. This is a long-term play based on the shortage of U.S. housing.
Yeah, and let's chat about a recession, right? Because everyone keeps talking about a recession. Some people said we're already in a recession. I don't necessarily disagree with that. But the way Buffett looks at it, recessions are just normal cycles. It just happens, right? The market goes up, the market goes down. He's not trying to time the market because you can't really time the market. Like nobody knows in the next 6 months if all these rate cuts, prices explode and go higher, or if people lose jobs and there's no demand and prices remain flat or maybe even go a little lower. But the truth of the matter is if they go higher and you get priced out, you can't, it's harder for you to get back in. We saw this from 2020 to 2025. So Buffett's not worried about whether we're in a recession or a cycle. And that's really important to understand.
Yeah. And I think that, Trump's been clear on, obviously he removed, I think it was Lisa Cook.
He's trying to.
Well, he's trying to, yeah.
In the process.
He's
TBD.
He's all over Powell. He's said publicly that he thinks rates should come down 3%. 3 points is what he said. And I think everyone agrees, now could be wrong here, that they think rates are going to come down this month when the Fed meets again. Now, obviously, who knows? But at the end of the day, something has to change. In order for somebody to afford something, the rate to buy it, the cost of money has to go down, or the actual thing has to go down. The price of the house has to go down. One or the two. That's the only way to solve this issue for the consumer. So I would expect the one thing that's going to affect the price of that to go down is going to be more inventory. And that could come from MLS, multiple listing services, amount of supply, growing and growing and growing. It could also come from new supply, which is really what Buffett's banking on here. He's banking on the fact that right now there's a problem. And I'm telling you, I think this is a brilliant move for him because we have an affordability issue and we're severely undersupplied in the U.S. as far as housing is concerned. And don't forget, if he can supply enough and if he can get the rates down, then that marketing cost is going to go down to the way it was just a few years ago where they didn't have their rate buy downs. That's a huge number. I'm trying to remember the exact, I think it was like somewhere between 10 and 20 grand per house for this rate buy down. Might even been more. So please fact check me there because I'm going off of memory. But the reality is once that goes away, that's margin directly back into what he's buying. So as rates go down, which is what he's betting on. And my guess is based on who he is and what he's done, he's pretty close to the situation about what's going to happen with interest rates.
Yeah, so Buffett's basically saying that there's not going to be a recession. It just doesn't matter if there is one. And I think that, that's hard for people to wrap their head around, even people listening right now. Of course it matters. People can't afford this and they can't afford that. But the truth is there's so much pent-up demand on the sidelines. There's so many people looking to buy. There's so many investors looking to buy. It all comes down to prices and rates, right? And if rates start to go down, then prices get more manageable. And that's just what happens, right? So you just have to think long-term on this stuff. Real estate, making money in real estate is a long-term investment. It's not a short-term, is it going to go up in the next 2 years kind of play.
But I also think, a lot of times people get caught up in the word recession. And I mean, it's fair, but what is it? Does it really affect you? It's two quarters of negative GDP. Like, what does that really mean? So now you got to hang on that word. So I think, we still have an affordability issue. The real issue, in my opinion, is going to be flat wage growth. That's actually what I think is one of the bigger issues. is going to be as a result of, people. We're not seeing the big layoffs, but I can tell you specifically, I know a number of companies, big companies, when somebody turns over in their company, they're saying, do I need to replace this person? Or can I absorb this by using AI? In other words, can my employment base shrink naturally over time, without laying off, right? So the optics are fine for these companies, and so this is happening right now. So I think that's one of the bigger issues: are these people going to be able to afford? And of course, we still don't know the result of some of these tariffs. Which I just can't see any way around that. Some of these prices have to be making their way into the system.
If they're deemed, legal,
we'll
right?
See, right? I guess that's up for debate now too, which is totally reasonable and fine.
So do you think there's so much up for debate right now? Like, this is honestly one of the most uncertain, times for the economy and for real estate, because tariffs are up, for debate. Fed rate cuts are up for debate. All the, the job numbers are up for debate. AI is coming into the picture. There's just a lot going on right now.
I can't imagine that rates aren't going to, under Trump's cabinet, are not going to go down. Whether it's this year or next year or, in 2-3 years. So he's made that super clear. And don't forget, he's been president before. And, so we have a little bit of a playbook from this. So that should not surprise anyone. So if you're sitting in 2 years from now and rates are a lot lower, and you're like, oh, I didn't see that coming. Well, shame on you. Now, if it cash flows today at today's rates, who cares?
Well, it is hard to find cash flow.
Yeah, I know, and it should be, by the way. Gosh, come on, you guys are wussies.
But it's getting closer.
Come on,
it's getting closer, because I was looking at deals yesterday and I found one that was like $200 off a month from cash flowing.
You guys,
so with a slight rate
so
cut.
Lucky. I've been in this business for so long. I'm telling you, we've had. I bought stuff where rates have been 7, 8, 9, even 10%. Where cap rates have been super low, super high, interest rates super high. It's just a reflection of the cash flow is a reflection of the price plus the rate, of course, and a whole bunch of other things on the expense side. But at the end of the day, we just went through a time period that just made everyone completely soft. So everybody's like, I can't believe I can't find anything that's cash flowing. Well, guess what? Welcome to how hard real estate's supposed to be. Mm-hmm. And you just got lucky. If you hit it during that period of time, you just got to know that that was a gift. It's supposed to be hard. You're supposed to go meet with banks and work out their problems and find stuff that cash flows. And real estate is, it's not supposed to be like a stock that always just goes up. That's the period of time we just went through. So these higher rates, in my opinion, are a little bit of a gift, because now I get to see, well, as Buffett, so might as well talk about it, as one of the best quotes from him is, you really see who's swimming naked when the tide goes out. And the tide is going out on a lot of stuff, on commercial office, on multifamily, on people that paid too much. And certainly we're seeing the issues on the home building side because of the rates and the costs. And the consumer can't afford stuff right now. So when all that is happening, guys, this is the time to pounce. Could it get worse? Of course, it could absolutely go down, but he's playing the long game here. And at some point, you're going to look back at this video and go, rates are down. And, so we're buying today as cash flowing today. Then if rates go down, great. Then, of course, we'll refinance as they go down, just like I did in 11, 12, 13, 14, I've already done this. And if the cash flows today and you got a good story, buy the asset, because you're not going to get ahead in this economy, by sitting in cash. That is for sure.
But I also want to bring up, because you bring up a good point with refinancing. It's like right now, the people that are in trouble. So the people that I'm seeing that are cutting rates and that are in trouble bought in the last couple of years because their rates are really high. Well, that being said, if rates go down, all those people then get to refinance at these lower rates. And then they're no longer in trouble, right? They're able to swing their payment. So, because right now, the whole subset of the economy that has rates under 4%, they're for the most part fine. Their housing payment is much cheaper than any rent payment they're going to get. It's the people that bought in the last couple of years. So that's really going to help and stabilize the housing market. And I think that's going to be even harder to find a deal.
Yeah, and you know, guys, like the tea leaves, just you gotta stay out of, you know. I think, you know, sometimes we hang on the Fed's gonna, you know, do a quarter point or half a point. It's not meaningful. The word recession is not meaningful to most people listening, right? It's just not. Like, you know, I know it's reflective of where the economy's going, but it's not completely reflective on whether you should buy something or not. You know, why is Bitcoin up? Why is gold up? Why is silver? Silver's crazy high right now. I think it went over 40. You know, and this is specifically why we have this sponsor, you know, Monetary Metals, you know, which we'll listen to right now. They're one of our sponsors. They came to us because they're really, really busy. So let's take a short moment and listen to them. Gold is near all-time highs, but appreciation isn't the only way to benefit. Monetary Metals, you could potentially earn a yield on your gold, paid in physical gold, without selling it. Here's how it works. When you lease your gold through their platform, pre-qualified companies pay to use it under strict guidelines, like renting out real estate, but with gold. Instead of paying to store your metal, you may earn up to 4% annually in gold. You stay in control, and you can choose which leases to participate in. Monetary Metals handles the due diligence, lease terms, and all the administration. Thousands of investors use this approach to grow their gold, not just sit on it. Visit monetary-metals.com/Ken to learn more. Leasing gold involves risk, and returns are not guaranteed. This is not an offer to buy or sell securities. Please review all risk disclosures at monetary-metals.com. Visit monetary-metals.com/Ken to learn more.
So what does Buffett's bet mean for buyers and sellers? Because a lot of you listening, I know you're looking at buying or selling a home. So let's discuss that.
Go ahead.
Okay, I was going to say, you know, there's going to be, you know, more home options as rates go down, more people are going to be buying. So as a seller, you know, it's going to be easier to sell your home than it is right now.
If rates go down, of course,
rates go down.
Right? Yeah.
Yeah.
Yeah. I mean, obviously, that's why if you take a look at when rates went up, over 2 years ago, the home builders had to do this, right? They had a bunch of inventory. They had to move. So what they did is they did these rate buy downs. They're still doing the rate buy downs. We have had a tremendous amount of conversation with some of our title companies, and you know, that represent, these are big national companies, and they're like, oh yeah, these home builders, they wouldn't survive, because obviously when you build something, usually it's higher price, not always, but typically they're higher priced, and so the you know, they have to do these things in order to move the needle. But I also think there's some leading indicators that, you know, anybody can look at. Okay, so what are they? What are some leading indicators? Well, one, you can take a look at the home ownership rate, right? Which as some of you might know, it got up into the 69.2%, I think it was, under Obama, but it was really pushed up from Clinton and Bush. Because they were doing all these things. I think it was called the basically Everyone Should Own a Home Act, or, you know, I know I'm generalizing, but there's a couple of very specific things that they called it. Each one, it was a little bit different, but it's just marketing at this point. Basically, they just felt like everyone needed to own a home. I would expect that Trump's going to come out with something like that.
It seems like it, right?
Yeah. He's going to come out with something. By the way, it's not a Trump thing. It's a presidential thing. Just take a look, you guys. Like, Clinton did this, Bush did this, and the real GFC issue, even though it landed on Obama's watch, was created with the two presidencies before. If you really look, it was a run of people going into single family.
But I think it's important to note that, both sides of the aisle are for this, right? Because even though while it might not be great to give people, a 40-year mortgage and all these things that kind of, as people would call permanent renters that just own a house, people want to buy a house. And so it's going to be supported on both sides of the aisle. And that's why we think that some of these things are going to get passed, right? And when more people can buy a home, what does that do to prices?
That's what I love about it. I love the fact that, this country's so polarized right now on so many things that this affects everyone. It doesn't matter if you're, what color you are, right? So I believe that people should get into the single-family home market. And by the way, as you guys know, I'm a landlord. But this is healthy. It's healthy when people are paying down their own mortgages. It's healthy when they're building equity in their own homes. And I'm speaking from a generation before me and my generation. So what we have right now is what's in jeopardy is the next generation. The next generation is in jeopardy of being able to actually own anything. And I, for one, do not believe we should be heading into a renter nation, but we are. And as we start to see that home ownership rate, which we already saw under Obama, went from 69 to 68 to 67 to 66. It's somewhere in the 65, 64 range. I didn't check before the live today. But on the opposite side of that is the renter percentage. So if we're at 35% rented and we're also at 65% home ownership. So to keep your eye on that, because that's not good. And I think something has to happen. Otherwise, we're going to creep down under 60% home ownership rate for the first time.
Yeah, absolutely. And so essentially, if you're buying, you need to understand that prices might not be low forever. We don't know what's going to happen in the next 6 months. Nobody does. People say that things are going to crash. People say that things are going to go up. It really has a lot to do on the job market and the federal rate cuts. And then whatever policies, Trump comes up with to help ease into housing. But at the end of the day, don't just assume that it's going to get less and less and less, because you might miss the window. And if you're selling your home, know that right now is a hard time to sell your home. And if you can wait, it might be better to wait because the market is frozen right now.
And not in all areas. Danille, as you guys know, has her real estate license, and she's actually showing houses today, this afternoon. You showed how many? 14 yesterday?
14 yesterday.
14 houses yesterday. Okay. So now, granted, this is in the Phoenix area, but anything at the 500,000 and under range is what, one day on the market?
Yeah, it depends. I mean, things that are priced right are selling.
Quickly.
I just had a client make an offer a couple weeks ago. We did an escalation clause over asking. Day 2, it was on the market and it was sold, right? I'm sure out of the 14 houses, when I go check today, when I go to reshow some of them are going to be pending. The market is not crashing, right? They're not crashing
at that price point, and only in Phoenix. And so again, we're not a national housing market.
But my brother, he's looking in Ohio and things are flying off the market. He was trying to tell me things are flying off the market there. And I'm like, well, I don't know. Let me look. So I've been helping him kind of follow houses. Things are flying off the market there and they're cash flowing right away for investors, right? So, every market is very different and every market is very cyclical.
Right. And I think that's the point. So clearly we just made a case for something that's very strong with one specific example. It doesn't represent the whole. But the point is there are markets that are really strong, and then there are markets that are getting annihilated, as we know. There are markets that there's listings, they're stacking up higher and higher and higher and higher, and we're having price declines, right? And which is exactly what should happen when you're looking at hundreds of different markets across the country with hundreds of different variables. But the one thing that'll move all of them is the lower interest rates, right?
Yeah, and I think as soon as investors can cash flow, that's really going to affect the market. So a lot of people are talking right now and they're saying, oh, if rates drop 2%, that's not going to do anything for a home buyer's monthly payment. The truth of the matter is there's a ton of investors sitting on the sidelines right now, and they're waiting for rates to drop enough or prices to make a deal work. And like I said, I'm starting to look at deals, and deals are not working yet, but they're super close. They're like a half a point away, and the stuff I'm
that's
looking
if you
at
don't have
working.
HOA, right? Because HOAs.
That's with a no HOA.
Be careful of HOAs right now, guys. Like that's the sneaky silent killer of cash flow, because we are seeing, well, especially Danille. Danille is seeing $100, $200, $300 a month more in HOA fees, because most of these HOAs, as you guys know, are, I would say they're managed by amateurs, right? These are just normal people trying to do their best, and they just don't understand it. Like some of them do, but most don't, and so they're always going to be behind. And then the homeowners themselves are saying, we don't ever want rates to increase, of course, but now they're in this pickle, just like all of us, where costs have gone up, and the old HOA rates of the past don't cover the expenses today, and so you're starting to see that. So be careful of that.
Yeah, and Dietz just said that they are an appraiser in Maryland and Connecticut, and they are seeing every purchase is going over asking there still. So I do think it's an important, to understand that when you're seeing all these crash videos, of course there's certain markets, the Florida condo market, because of the new law that was passed, those are kind of on fire sale right now in a lot of areas. But only in the older buildings that have issues. Like if you even look at the Florida condo market, it is mainly the buildings that have these big assessments coming up that people are then fire selling because they don't have the money for it, right? So you really have to look. It's not a nuanced market. It's not everything crashes or everything goes up or it's not that kind of market. So you have to really look at your area and see what's going on in your, specific market.
Depending on what you're trying to do. So for us, for MC companies, for Ross and I, we look for markets where the single family home prices are really high, and there is a big jump between the apartment rent to the mortgage. So as an example, we just bought a building in Scottsdale. Well, for those of you who might know, the average home price in Scottsdale is well over $1 million. Okay. We also bought a property in just outside of Las Vegas in an area called Henderson, Nevada. Exact same thing, where the homes in the area are over $1 million. And so when you start to take a look at these $1,600, $1,700, $1,800, $1,900 rents, that looks like a bargain in that particular area. So there are ways to invest in these areas. And so, the same thing across all lines. Danille had one client look at 14 deals yesterday. And so she knows the underwriting on 14 deals. Very, 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 very difficult to cash flow. And so the solution, put a lot more money down.
Yeah, you just put more money down. And that's what investors are doing right now if they have the money to do that.
Right. And of course, at the end of the day, you still have to look at your cash on cash return, right? Mm-hmm. But the reality is if you guys think that we're heading into inflation, which most people do, and by the way, all you got to do is look at the rearview mirror. Look at the last 10 years, okay? So pre-Trump, and then the last 20 years, the last 30 years, just look at inflation. And if you think that you're so smart because your house went up, you should coin it directly to inflation. Just take a look at what inflation's done. Inflation, if you're a homeowner, if you have debt, if you're in a hard asset, is going to be your friend. Because it is that hidden market force that's going to carry that asset up as a result of what's going on. So that's actually one of the reasons why we're so active right now is we want to buy things where we don't have to do anything. We just sit back and let the government do its thing. And as things inflate, as a 2x4, an appliance, as concrete, as roofing materials, as lighting, whatever we're going to buy, as it continues to go up, then so does the actual cost of the replacement cost, right? So, so that's essentially the game here, is just get into the game. If you're sitting in cash, in my opinion, by the way, I have plenty of cash for reserves, but I'm talking about heavy in cash. Like some of my friends that are professional athletes or musicians or whatever, they have a lot of cash. You actually need, you need to figure out a way to be in something that moves with inflation. That's all.
Absolutely. So hope you guys enjoyed this, and we will see you next week.
See you guys.